This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Hello again from TF Metals Report, and welcome back to your latest TF Metals Report podcast highlights for the week of May 8th through 12, 2023. Again, a daily podcast summary, just part of what you receive as a subscriber at TF Metals Report. It's a great place to learn and interact with precious metals enthusiasts and others from around the globe. I invite you to check us out at tfmetalsreport.com. As the week began on Monday, May the 8th, we knew we had a busy week ahead with lots of inflation data, a lot of Fed goon speak. Didn't know for sure how the week would turn out. But on Monday, things actually didn't look half bad. And we thought perhaps the chart of the GDX, the big mining share ETF, might hold some clues as to where we were headed. By the end of the week, we found out, maybe it didn't. Nonetheless, on Monday, it looked like it might. So that was one of the things we discussed. Again, Monday, May the 8th. And then finally, the GDX. Look at that. You can't really see it because I wanted to show you basically the same formation in the GDX. Again, you know how much we've talked about this for years, about how GDX and silver track each other. But again, same kind of formation. Came down double bottom, moved to a new high up to 36 back, whatever that is, April the 13th, whatever it was. Now a little bull, a little flag. Look at the two beautiful green candles. Thursday, more importantly, Friday, where we were down on the day, but big, massive green candle. Shares being bought on the dip. Very good sign. Get above 36 on a closing basis, particularly on a weekly closing basis, and we're going to 41. Well, hell, you think that's not much? That's 15%. Would your little miner portfolio look better if it was 15% higher? Sure it would. So again, this, to me, makes it look like the shares are going up. That chart of silver makes it look like silver wants to go up. Gold looks like its next stop is maybe 2,100 once it breaks out. And then, the dollar, if the dollar breaks down below 101. So you can see how these things might all connect. Continuing that discussion of the mining shares, Tuesday, May the 9th, we concluded our daily podcast with a discussion of two of the shares that I own and have owned for a long time. Agnico Eagle Mines, big major gold producer, and Franco-Nevada, big major gold royalty company. Both charts were looking up and looked like they were foreshadowing higher prices. Again, by later in the week, we found out that wasn't true, but it was certainly something to consider back on Tuesday, May the 9th. Couple of stocks. I love AEM. I loved it before it merged with Kirkland Lake, which I love dearly. So now probably my biggest major mining position. It's got a little flag going, doesn't it? Look at that, climbing the flagpole, right? Rallying just this month. From 56 to 61, flagging with support about 59.60. The trend is up. So normally, and it doesn't mean you can't break down in a little pennant, this little 4-day pennant. Doesn't mean you can't break down and go down, but the trend is up. The moving averages are all pointed up. Again, like silver, 50-day above the 100-day above the 200. So I suspect this is going to break to the positive side. And again, if it's going to break the positive side, what does that mean the metals are likely doing? Okay, so there's that. And then my other big position always has been is Franco-Nevada. Look at that. Franco-Nevada, highest close of the year, actually the highest daily close since April 21 of last year. Almost 13 months, 12 and a half months. Again, that looks pretty good too. It doesn't look like it's flagging. It looks like it's just generally trading higher this month from 152 to now 160. All-time high is up near 170. Doesn't see any reason why it's not going there, at least from a chart standpoint. So if Franco-Nevada looks like it's going up, $10 from here, and if AEM looks like it wants to break out and go higher, then what do we then deduce is going to be going on with silver or gold for that matter? Again, I can't use any of this as logic to proclaim, so therefore the CPI is coming in less than expected tomorrow. That's a long walk. But these charts, I think, can kind of tell you where, in the very short term, price might be headed. And you can deduce from there what might cause price to head that way in the first place. Our first signs of trouble began to appear on Wednesday the 10th when, after the latest CPI update, Inflation at the retail level, at the consumer level in the U.S. appeared to be cooling just as we expected, and rate hike expectations fell off. The bond market rallied. Everything pointed to a rally in the precious metals. And instead, after an initial rally and silver got north of $26 to about $26.20, here came the hammer, just nonstop selling for about 2 hours. We suspected it was price capping above 26, brand new shorting taking place to drive price backward. And as it turned out, that was happening in anticipation of the slam that was to follow on Thursday. Very profitable trade for those that were able to execute it at the bank level. Regardless, not knowing what was to come on Thursday, that chart of silver sure caught our eye, and it was all part of what we discussed on Wednesday. You can see this in silver too. Holding above 25.50 as it did today. Its own little wedge. Clear resistance that they're enforcing near 26. Exact same as I showed you yesterday. Exact same intraday high of 26.435 on those two big red candles that they've been able to print last month and then last week. So we'll see. If I still have a call for July gold that expires at the end of next month. But I got to tell you, if it starts breaking down below 25.50 on a daily close, I may just have to take that off for now. We'll see. Again, the disheartening thing about today is the clear, to me at least, evidence and footprints of bank manipulation to cap price and drive it backward to avoid, put good money after bad to keep your shorts going even further underwater. Last data point of significance for a little while, so therefore, last thing they want to do is have it rally and then not have other data points that they can use to drive it backward over the next 5 or 10 days. So you get this hammer job today. And like I said, very frustrating to watch. As we move into the summer and through the rest of this year, this regional banking crisis in the U.S. is going to worsen, not only on a balance sheet level, but a portfolio level as commercial real estate issues begin to worsen as well. Don't believe the cheerleaders. Those just simply pumping sunshine like Kramer and others on CNBC. This is a major problem. And you're beginning to see this again in the chart of the KRE, which is the large ETF of regional banking shares here in the U.S. It appears to be breaking down. It looked like maybe it was better. A little island reversal late last week. Looked like it opened strong on Monday, but it's been nothing but down since. More problems to come in the sector. More problems to come for the Fed and the Treasury Department. Something we will be keeping an eye on at TF Metals Report, and I urge you to do the same. Finally, here is your regional bank ETF. There was this Circle Day last week is last Wednesday? Make sure, that's last Thursday. Sorry, Wednesday late was when all PacWest shit started to break out. And you had this gap down, sharply lower to almost 34, closed at like 36.08, and then a gap back up. Looked to be an island reversal as it rallied again on Friday. Looked even more like an island reversal as it opened up there near 39.50 on Monday. And then, nope, maybe not. Now we're back down to 36, just barely avoiding a new closing low today. I think we closed like 36.15. That's why I say tomorrow is a huge day for the regional banks and then into next week. If they plunge tomorrow, if there's more bad news on PacWest and some of these others, this thing closes not only at a new closing low, but somehow, if it drops a couple points tomorrow and closes below that low of last Thursday, holy Toledo. So anyway, we're going to watch the dollar close. To hell with the metals. Let's watch the dollar tomorrow, and let's watch these regional banks. And on Friday, May 12th, the price smash in COMEX silver, which began shortly after the CPI on Wednesday, appears to have at least bottomed out for now with support at the 50-day moving average. Nevertheless, price has been trimmed for $2 in 2 days of trading, not dissimilar to what we saw in the 5 short squeezes that we've witnessed since late 2022. The banks get to the point where they've seen enough. You get a short squeeze, magic rally, or the banks have seen enough on the upside and we get these smashes. This is the second one, and as you can see on this chart, the action currently is quite similar to what we saw in early February. What happens next is going to be a function of two things. Will that 50-day moving average continue to hold its support? Fortunately, on Friday, price closed above that key short-term technical indicator. But what's going to happen next with the dollar? The dollar's rallied over a full point from its lows Wednesday morning, and that's given the algos reason to dump COMEX silver. What will happen next? In February, the dollar continued higher from 103 up to 105, and silver just continually washed out for the next 3 weeks. Will the dollar now reverse and head back lower? Well, all of this will determine whether or not silver is going to bounce back. 23 to 50 to 24 is important support, but the new resistance level we'll have to get back above is 25. Maybe we'll know more about all of this by next Friday and your next TF Metals Report podcast highlights. Thanks for listening, everyone, and have a great weekend.